Good morning, everyone. It is Tuesday, May 25th, and this is Nadex Morning Analysis. I am Todd Rich with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple as always. Brian and I are going to talk about potential hotspots to look at in the markets today. But before we get there, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we going to be talking about today? It is a bit of a quiet day. What are we seeing? A couple of things that we're seeing. One, we're seeing commodity prices, even though they're off in the last few hours, they're continuing to drift higher. We'll take a peek at oil first, and then we'll take a look at gold as well. In fact, we'll probably even run through some of the things we discussed yesterday. In fact, this chart here will be kind of fun when we revisit it and Brian gets going. We've got consumer confidence for May at 10 a.m. this morning Eastern. That is one thing that could potentially move the markets. How are consumers feeling? But in general, traders are becoming more comfortable with what the Fed has been saying, that inflation might be transitory. As people adjust to that, we're seeing support. U.S. equity markets all looking to open slightly in the green. Dollar still weak. And there are some interesting things happening there. In fact, I think one of the most interesting things there is in China, and Brian will bring it up. China is buying dollars now. The dollar has gotten to a point where, hey, fine, you guys don't want them, we'll take them. That's rather interesting that China would step in and start buying dollars and storing dollars as a reserve currency. Clearly, that's also something that they're doing because they don't see value in holding it in cryptocurrencies or Bitcoin. So lots of little things that are going on, but nothing that's earth-shaking this morning. Brian, I'm going to flip it over to you, and let's talk a little bit about commodity prices. The China buying dollars thing is rather interesting. And then I know we're not going to do a full-blown analysis. I will say we're going to keep it a little tighter this morning, and that is because, and I'm putting this up, Brian's going to be doing a full-blown hour-long session in 3 hours. So let's give you a little bit of a tease on some of the things to look at this morning, but then we're going to come back. We've got the weekly market analysis webinar that's an hour long, and it goes the gamut. So I just dropped the link into the chat if you haven't registered for that. But register for that. Brian and I will be going through for an hour on everything later this morning. So Brian, it's all you.
I keep forgetting I wear this shirt. I'm looking at it. I'm like, oh my God, it's like psychedelic.
I think I kind of like it.
It's like, I mean, it's horizontal stripes, but it's like, I don't know, for some reason, I'm like looking at it, I'm like, oh God, the ADHD is kicking in here, right? Anyway, so I mean, it's been more or less quiet. We're seeing a little bit of Euro strength out here, and that Euro strength we're seeing is actually also coming out of China. China's all over the news this morning. And it came out 1 minute ago, but again, this is one of those things that is not necessarily new, but the senior Chinese diplomat says that China sees the EU as a partner, not as a rival. And again, we're seeing European strength versus the dollar here. We're seeing the euro pound up slightly as well. So it's kind of the same what we saw yesterday. We saw slight euro strength, small dollar weakness yesterday. And that's pretty apparent across the board as well. Euro dollar, pound dollar, both in the green. Dollar Swiss, dollar CAD, both in the red. Aussie dollar up. Again, dollar yen is kind of a weird pair as far as determining strength goes. But it's 5 pips in 24 hours. So very, very small movement. Couple headlines that have just come across in the last 15, 20 minutes. First one is Barkin, and he's being interesting statement here. I'm hopeful that we're on the brink of completing the recovery. It's the first time I've heard completing the recovery.
There's a lot to unpack there.
Yeah, I mean, that's rather new to me. So I mean, we're talking about inflation as recovery goes along, but Barkin is under the belief that we're completing the recovery right now. So that's interesting. He talks about the labor shortage is expected to continue until the summertime. And again, a lot of this has to do with, they're talking about unemployment benefits, and they're talking about pulling those, the federal assistance on there. So that's one aspect of it. And then he's saying that I see price pressure in freight, energy, and agriculture. So interesting headlines from there as far as, like I said, completing the recovery. Who knew? And again, statements like that are actually good for the overall, the indices. Just because, again, if we're at the stage of completing it, meaning that we have no forces that are hurting us anymore, I mean, we're not seeing inflation running rampant right now. I mean, that's, we're not at that stage. And when, they're talking about letting it run at a hot level for a while. If we've completed and we get to stay under these conditions, that's great for the overall indices. Now, as far as the dollar goes, yeah. So this came out, Reuters, a bit ago, about 6 hours ago at this point. China is buying dollars to curb rapid yuan rally. So what makes it interesting about this one is, remember that Russia and China have both made statements about we're going to remove the dollar. But again, removing the dollar as the world's reserve currency would basically put an extreme level of devaluing on the dollar, right? The largest holders of U.S. debt is typically the Asian countries, Japan and China, and now they're also buying dollars. So it's always interesting to see how this kind of, not manipulation, but how the play goes, give and take, back and forth. There was a big article yesterday that I saw that talked about how cryptocurrency miners and really the cryptocurrency industry is moving out of China at this point. And remember, China's big push is we want the unregulated cryptos out, but we are going to have a state digital dollar and our digital currency. And they were laying the groundwork for the rest of the world, saying, hey, this is what we've tested so far. This is what worked, and these are the guidelines. And again, I mentioned before, I thought this was very bad. If the United States is going to become, or stay the kind of leader for the world, and particularly a digital dollar, China can't be the one that's telling every other country how to create theirs. But we did see comments yesterday of the U.S. digital currency that they're trying to get out this summertime. So they're speeding the process up there. So that's kind of where we're at as far as commodity pricing goes. I'll cover these three really quickly. Again, gold is a little bit flat on this news. I think gold traders are like absolutely completely confused at this point that the recovery is complete, supposedly. But here's where we were yesterday, and we talked about oil, and we said, I remember talking about this, that, we typically have one of the sessions that is the big one, that we have these where it's small and then big and then big and then small, small, big, small, big, and they go back and forth. And yesterday we saw a very compressed European session. And I mentioned if we get above 64.96, it was the last really area that we had some type of a test last move, that there were some small things in here. And again, you can see it chopping back and forth. So had you been trying to trade that, it was hard. But yeah, it was a takeoff point, 64.95 all the way up. You can see we ended up around 66, and again, we mentioned that 66 was a big number, right? Since that time, we've kind of put a new top in, and again, we've had a very compressed Asian session oil trade, right? Not as much movement, again, about as much as we saw yesterday. So we are one day out from oil inventory reports, and the question is that that API number going to be the big mover today, and will oil continue to drop? At this point, they're talking about labor shortages, people not working. That's not necessarily good language. And again, the API report, as far as what oil goes today, could be another piece of it. But looking at it right now, you're seeing topping in here. And again, if you talk, Barkin is talking about, I see pressure in freight, energy, and agriculture. It's kind of like, hey, listen, you're bringing that, energy, oil, freight. These are all things that are kind of in that oil wheelhouse. Could this be kind of somewhat of a top and a new trend that's forming as we pull back down again, right? We see the highs are definitely coming to the lower side. And again, if we do start to collapse even more, we know that there's not really buyers stepping in, at least till the 65-ish range, but really probably down here into almost the 64.50 range. So again, preparing for oil inventory reports tomorrow. We've seen this in the past where the Tuesday was the big mover, not the morning of the oil inventory report. So, right now it's kind of setting up interesting. We're just kind of basing sideways. But again, we got three small levels of sellers up top and no buyers really until we come down to the 65 range, about 60, 70 cents lower. So there could be something, moving with oil today.
Yep. I wanted to bring this up on the Nadex platform. I haven't touched the chart from yesterday. And we did. We saw that. I think it was rather interesting. We talked about that Harry Potter trade setup early in the day, Wednesday, and when it rolled over. Crude did roll over, and Brian had mentioned, this is when we went on yesterday, that look for that move, and it made it. I mean, it made that big move. We're doing another small little move here. The question is which way does it go? Now, I did just drop into the chat. Brian mentioned that API oil stocks, oil inventory report. That is today at 3:30 p.m. Eastern. Now, if you were looking at trying to get something set up for a trade there are the weekly binaries that you could take a look at. That's what I've got up right now, because by then our dailies will have settled, right? It's right when the report comes out. So you will have those weeklies that are still available, but something to be looking at this afternoon if you're looking for maybe having that report make a move, but it could make a move well before then in anticipation of it. So oil, definitely something to be looking at today. And as we mentioned, we knew that oil would be something through the entire economic recovery as a supply demand product. As the economy does continue to heat up and that demand starts really heating up, oil will continue to stay in play.
Mm-hmm. And you may wonder if the recovery is complete and we're still progressing. Why the heck would oil go down? Well, think about it. Part of the reason why oil has been going higher is because we've mentioned that, hey, listen, as people are going back to work and people are starting, as the economy is coming back online, the demand is going to increase. If the recovery is already here and we've completed the recovery, there's no additional increased demand that's coming, that this is it. It's kind of like the wah, wah, wah. So it's not something that oil traders necessarily want to hear, that, hey, recovery is complete. It's like, wait, what? Where's all the massive demand coming in? It's supposed to be coming in, right? We're not out of this yet. But, if people are starting to make comments about how we're past, maybe there's more to it than what we know right now. And again, if so, if this is the max demand that we're going to receive because we have officially recovered, and we just hire people for jobs. Yeah, I don't think we're there yet, but I'm just saying he's got more data than I got. I'm not going to question him. I look at it on a chart. But again, that's one of those fundamental factors that you say, if this is the max demand that we're going to receive, and again, think about where we're at with inflation too. That's another important factor. If you look about, where we've been for gas prices a year ago versus where we are now, if this is it, if we've maxed out and we're going to have the higher gas prices, which we have now, could that inhibit people from traveling this summer? Could that lower the normal demand that we see? It could. So, it may not necessarily be the best scenario for oil to break through that $70 mark. So, let's go and cover gold and silver real quick as well. So gold, again, you see news like this, you can see in the gold, this is a 30-minute chart. I'll make these candles really, really big so you can see them. This is kind of like we have no idea what we're doing. The open and the close is almost at the exact same spot. It's almost all wicks back in there. So for the last, 1, 2, 3, 4, 5 hours, gold traders are absolutely just shocked. What do we do with this? China is now buying gold, or buying the dollar. They're getting into a play. It's kind of like, what do we do with that? And again, no movement here, but yet if you go down and kind of look at the cryptos, again, that's the exact opposite. You can see that those are down for the morning. All three, Bitcoin and Ethereum are both down pretty big. So it's kind of one of those things. China's buying gold. It's kind of like, what do we do with this? And again, there's been really no movement thus far. Again, when the U.S. trader comes online fully, I expect we see more, but I'm still looking for this 1891 as a potential level. But right now, there's no such thing as a trend in this. It's just going sideways. Silver's been a little bit kind of more of a whipsaw back and forth. Yesterday, we were doing a little bit better. We're sitting back over here. We were up today. It's then the exact opposite. And again, there was a short here earlier in the morning. Right around here, this is the European session open. There was a nice little spike up, and the 3 o'clock candle is the red one right here, pulling at a level where there were sellers before with some basing. Again, there was a short opportunity. And again, as this one continues to push lower, we know we have some buyers in the 2740-ish range. But I still think, again, we got to get out of this. We've been in this area for a while. We keep coming back to the same 2750-ish, 2760-ish level. I think we really need to get down to 2720 before we see a whole lot of movement, right? Because remember, Reddit said they're taking this to 100. We're not quite there yet. We're not even close. And if recovery is already here, it's like, wow, whew, really? We don't have rampant amounts of inflation, unfortunately, to kind of balance it. So indices right now are all in the green.
Yeah, I was going to say, let's just do the NASDAQ quickly, because I don't want to go through all of them. Again, because we're going to tease up the session later, but I think NASDAQ would be the one that you want to do.
Yeah, they all basically look the same. Yesterday, we talked about 3 different levels in the indices that, listen, if we get a break above the top side, look for those to go higher. Right now, kind of the same thing. We talked about 13,388. We did kind of break through, and again, the European session just drove it down, and now it's starting to base along that level. But at this point, again, recovery is going well. They're saying it's doing well. Consumer confidence is obviously a big one that can really start kind of messing around with it, but it's already expected to be a little bit lower. So they're expecting consumer confidence to be lower. What if it doesn't come in lower, right? What if it comes in higher? Again, another one of those fundamental factors that could also help stimulate these higher. But I think, today, I think 13,800 is up on the radar. It's only about 100 points from where we are. And maybe even if we break through 13,823, we can go even up into maybe the 13,950-ish range. Again, not a huge day. Consumer confidence is one thing, but it's not a large, kind of top 5 news release. But again, it's the same scenario. We'll break them down at noon today. ESNQYM, they're all something similar, going through a level that we talked about breaking and punching higher. But come back later today and we'll kind of break those down further.
Yeah, I also did drop in. I wanted to so you can see the Daily FX website where there is the calendar. So if you're ever wondering, I mean, this is a really handy calendar. You can set it up. You can see what's coming up tomorrow, later in the week, today. You could adjust it for different regions, the importance level of how it could potentially impact the markets. But what we're talking about today is the 10 a.m. consumer confidence number. All right. And look at this. These numbers just dropped in. What was that? That was the home sales, the home price index. But keep an eye on that. And then, as I meant, and Brian was mentioning later, is at 3:30 is the API crude oil. But it's a handy tool, and it's there. Yeah, I dropped that into the chat. Also, I did drop a link in for the chat to the session that Brian and I are going to be doing later today. With that, if there's any questions for Nadex, please email us, customerservice@nadex.com. Brian is also available. If you got any questions for him, curious about some of the analysis he did, please reach out to him, support@keeptradingsimple.com. Just as a reminder, what did we talk about today? We're seeing commodities are drifting a little higher, just in a little bit of a trend. Oil and gold, even though they've kind of pulled back, oil's pulled back recently in the last couple hours. Equities all looking to open in the green. Traders maybe becoming comfortable that the inflation might be transitory. Maybe we're deep into this recovery. And then that other really fascinating news: China buying dollars. So, anything else you want to add, Brian, quickly before we call it a morning session?
No, like I said, unfortunately, with lack of news, it's one of those things that it's a little bit harder of a morning to trade because we don't really have that catalyst. But
Right.
Remember, Todd was talking about weekly binaries. Don't forget to go over and look at knockouts. Make sure you know where all the knockouts are, top and bottom, ceilings and floors, the closest one to wherever current price is. Have them marked off on your chart. So if you don't see a great opportunity set up, do the extra homework. So when it does finally approach, you can become an if this, then that trader with those knockouts. But that's all I got for right now.
That is great. All right, with that, Brian and I will be back in 3 hours. So hopefully we can catch you then. Otherwise, we will catch you tomorrow morning. We wish you all good luck in the markets. Thanks, everyone.